Tell me, how fair is it for an investor, normal investor like us, to buy this company at this price, the highest peak $21, and then that investor to have a decline over 67%? How fair is it? Another question I have for you. Tell me, what is the real market cap of Intuitive Machines? 1 billion according to Google Finance? Or 600 million according to Yahoo Finance? Well, let's start with the beginning. First question, how fair is it for you to invest in this company and have a massive decline like this? Let me show you something very important. If you look on their balance sheet here, you can see the shares outstanding. But which one of them? Because there are three classes of shares: Class A, Class B, and Class C. Now, and how do you calculate the market cap of this company? Which class is traded on Nasdaq? Because this company, as you can see, is traded on Nasdaq, right? You can see here, Nasdaq. So to find out that, let me show you something very important. Our question is, who owns this company? So let's check who owns this company. You can see here all classes, Class A, Class B, and Class C, right? And the holders. And as you can see, the management here, all directors and executives, officers as a group owns 29% of Class A, 29%. And there are other holders on even more than that. And then Class C, you can see that the management owns 100% of Class C, right? You can see here. And also the voting power. The management controls the company. Now, as you can see, Class A, and also you can see this on their balance sheet, they have shares outstanding, issued and outstanding. Class B doesn't have any shares issued and outstanding, and Class C. So you are left with two classes, A and C. And as you can see, Class A, you see here, shares issued and outstanding. You see here a massive dilution. They have increased the number of shares from 21 million to 80 million. And for Class C, you see here, shares issued and outstanding, they have decreased the number of shares from 70 million to 60 million. And my question for you, who owns the Class C? Well, not us, not normal investors like us, retail investors, but the management. You can see here that Class C is owned by the management, 100%. You can see here, 100%, right? Number and percentages, 100%. Three people, 23, 61, and 14%. And that number, as you can see, the shares have decreased from 70 million to 60 million. Their value has increased. But who owns Class A? Where you have massive dilution? More than or close to 4x, 4 times. They have increased the number of shares by 4 times, 22 million to 81 million, or better said here, 21 million to 80 million. Who owns this class of shares A? Well, the answer is retail investors like us, normal investors who want to invest in this company and take advantage of the stock price. Let's say from $3 to $20 and have an increase of 5 times. But there are also other investors who think that this company will grow even more in the future and buy the highest peak, $23, $22, and then the stock price goes down by 70%. How fair is it for those people to buy at the highest peak, $23, and then have this massive dilution from the management? Because they decide, as they control the company, you can see here, they decide how many shares to issue. So the answer is not fair at all. to have this massive dilution. It's not fair at all. I mean, you invest 10K in this company, you hope that you will have another 5x, but then what the management does? Issue more shares. And you know, when the value of a company is 1 billion and you have 100 shares, for instance, and the management issues another 100 shares, then that value is divided by 200 people, not 100 people. So your portion, your slice, gets lower in value. You get less. And that's why the stock price has declined so much. So it's not fair at all for shareholders, for retail investors like us. And of course, as you can see, the management is protected because they own the Class C, where the number of shares have decreased, not increased, from 70 million to 60 million. And you can also see here who owns Class C. Class C common stock. Management, 100%. And normal retail investors like us can buy Class C, only the management. And how fair is it to invest in this company? And by the way, to find out the market cap of this company, to answer the second question, is not 1 billion, so Google Finance has to update this number. Not even 627 million, but around this level, 550 million, unless they issued more shares more recently. You simply do the math, multiply this number by the current stock price. So the math is around 550 million, something like that. Anyway, Yahoo Finance is more reliable than Google Finance for the moment, in this case, for this company. Now another question is this company a buy as the stock price has declined by 17%, close to 17%? Well, you look at the past, you look at the management, what they've done so far. You look at the shares outstanding, what they did, how investors lost a lot in value, and you think, will the management do the same thing in the future? Just ask yourself, will the management do the same thing in the future to issue more shares, to double, triple, quadruple the number of shares? If your answer is yes, then you can trust the management. If your answer is no, that management will take care of shareholders, then you can buy this company. And if you look at their operations, you can see here that the revenue has increased quite a lot. But of course, the stock price plummeted from the moon to the earth, back to the earth. Because as you probably know, this company offers space, services, and products. You see the revenue has increased for the last 9 months, from 48 million to 173 million. So that's good, but they still have some losses. A good part is that they succeeded to reduce their losses. Now, you have to ask yourself, who are their customers and what this company want to do. So, they're a space infrastructure and services company that is contributing to the establishment of lunar infrastructure and commerce on the moon. And right now, their customer is NASA. And they also are saying that they have some worldwide commercial payload customers. They work to provide access to the lunar surface, lunar space, and data transmission for science, technology, and infrastructure. So all the revenue comes from NASA. And ask yourself, if NASA cuts the contract, what will happen to the revenue of intuitive machines? Will go down, and so the stock price. So be very careful that this company depends only on one customer. And you may say that in the future they will have more customers. As you can see here, tomorrow, working to provide a thriving, diverse lunar ecosystem, creating new opportunities and markets to enable on-orbit applications, permanent presence on the moon, and expand the commercial space exploration marketplace. Now, I have a question for you. Do you want to live on the moon? If the answer is yes, then this company may have more opportunities. If the answer is no, then you know what to do. So, investing in this company is like donating your money to fund their projects, their research projects. This is good. I mean, if you want to donate your money to a cause like this, to help them to discover new opportunities on the moon, but to make some money with this company is quite hard. It is quite hard. Because all it matters at the end is their profits. And to earn some profits from their projects they want to do is quite high. And be aware they depend only on one customer. So you might see some opportunities. If you invest in the long term, they might succeed. There is no doubt they have their chances. But be aware also of dilution. You've seen what happened. And the management won't be affected. You've seen their classes, class A and C, won't be affected. But we, as retail investors, normal investors like us, will have a lot of dilution if you invest for the long term, in the long term. Now, if you want to speculate in the short term to catch those ups and downs, then you can do it. You might make some money. But this is not investing. It's gambling. If you want to do that, follow that strategy, look at the stock price, how it moves, then you can do it. You might make some money. Or you can also short the stock price. That will go down even more than this level. But as I said, if you are a real investor, you'll be very careful with the risk. You've seen the risk for this company. So it's up to you how you decide to invest or speculate. It's up to you. And maybe you see some opportunities. You believe in the space industry that will deliver high profits and you want to take advantage. But from my point of view, for the moment, I don't see that opportunity. If you see it, if you have other ideas, please let us know in the comments. And of course, if you have other questions, again, please let me know in the comments. So that's it for this video.